Good morning friends, welcome to Sharekhan pre-market view. Indian markets had a volatile and a down session yesterday with Sensex closing down by close to 139 points and Nifty taking a cut of 39 points as the parliament logjam continued and there were expectations that the monsoon session could be totally wiped off. However, Wall Street had a fabulous session yesterday. After a 7 down days session yesterday, Wall Street ended up quite sharply. Dow had a positive gain of about 241 points, Nasdaq had a 58 points gain and S&P put on 26 point gain. This was after a smart bit of rally in the commodity stocks amid the deal by Berkshire Hathaway which kept the street upbeat. Today early morning we had the news from PBOC which has actually depreciated yuan by 1.9%. This is the largest depreciation on record for the Chinese currency. If you look at the rub-off effect of the global markets, it is quite positive on most Asian markets currently. They are trading in green. Singapore Nifty is also indicating a positive opening by close to 24 points. If you look at the flows were quite tepid, especially in the cash market. FIIs were seller to the tune of close to 20 crores, whereas DIIs were also seller yesterday to the tune of 50 crores in the cash market. While in a surprising move, yesterday FII had bought index future worth 613 crore. Now given this overall backdrop and a positive opening on Nifty, how Nifty is likely to behave throughout the day, let's have a view from our derivatives team.
Good morning friends, we'll give an analysis on derivatives. In yesterday's market, we have seen Nifty opening up with a positive bias despite mixed cues from the international markets. We have seen Nifty opening up with a gain of around 20 to 20 odd points, and thereon it was able to move above 8,600 levels and made a high of around 8,647 levels. But thereon during the day we have seen a gradual decline in Nifty, and in the mid part of the day, that is the late afternoon, we have seen Nifty nosedived into negative territory and has seen a sharp decline of around 100 odd points. And eventually closed below 8,600 and below 8,550 in fact at 8,544.30 with a loss of around half a percentage. Now in yesterday's trade we have seen selling was observed across the board as majority of the sectors closed in the negative territory despite information technology which saw some kind of respite where it helped Nifty to sustain in some kind of situation. While on the open interest terms, in yesterday's trade we have seen around 1% unwinding in open interest, and cost of carry have also reduced from 4.96% to 4.71%, indicating some kind of long unwinding was observed by market participants. That is, Nifty premium have now came down from around 28 odd points to currently 24 points currently. Put call ratio, since we have suggested put call ratio to take resistance at around 1 odd levels, and it took resistance at that level and have decreased, however just decreased 1 basis point from 0.99 to 0.98, and since we have seen a sharp decline in the last 1 hour or trade also, we have seen volatility index inching higher by around 3 odd percentage to 15.45 odd levels. Now the options activity we were observing quite closely in 8,600 call option activity. However, despite of market inching higher and has been sustaining above 8,600 in the most part of the day, we have not seen meaningful unwinding 8,600 call option, due to which we have seen a sharp decline, and we have seen continuous addition in 8,600 call option which continues to act as a significant resistance. It has seen an addition of a 5% followed by 8,700 call option have seen an addition of around 17 odd percentage. While in put option, surprisingly 8,500 put option have started seeing some kind of unwinding. So the activity of 8,500 put option today's trade would be quite crucial to watch out for. However, 8,600 put option continues to add 8 odd percentage build up in open interest in yesterday's trade, and the overall base of the call and put remains same. 8,200 put option remains as the highest in terms of open interest, followed by 8,800 call option which is the highest call base. There are two securities in ban period for today's trade, that is Amtech Auto and Indiabulls Real Estate. Surprisingly, FIIs in yesterday's trade were in net buyers in index futures, and they have created some kind of long positions in yesterday's trade. There were net buyers of around 613 odd crores, with open interest of FIIs in index futures have gone up by around 3 odd percentage. indicating long build-up by FIs. Index options have a net bias of 634 odd crores, while in stock futures they have a net sellers of 426 crores, and stock options they have a net sellers of 4 crores only. 5 days we have stand same at 8575. Now 8575 on the higher level would be the level to watch out for, and the lower range is at 8500 and higher range is at 8575. SGX Nifty is trading positive by 15 points, taking positive cues from the international markets. We might see some kind of gap up opening, and there on 8575 level would be crucial today to watch out for. If it's able to cross 8575 in today's trading session, we can see a further upside in the market. SGX Nifty is currently at 8540, indicating some kind of positive opening as suggested. That's it from derivatives. Thank you.
Friends, let's have a look at the trading ideas for the day. First one being Polaris. Now, a clutch of global as well as Indian technology companies are supposed to be in race to buy out Mr. Arun Jain's stake in Polaris Consulting, as it has been heard that the promoters have reinitiated talks to sell off the company. This could have a positive price action on the Polaris stock today, and one can long it with stop loss of close to 204 for potential upside of 214 and above that at 218. Our next idea is Nestle. Now the center has seeked damages of close to 426 crore from the Swiss major over alleged damages caused to Maggi noodles and caused by Maggi noodles for Indian consumers. One can short Nestle on this news with stop loss of close to 6415 for potential downside of 6330. Moving on to important news, the new launches and a low base has ensured that the passenger vehicle sales for the month of July has seen 11% growth YoY. However, a few players have continued to see sharp declines in their overall sales. Captive power producers have actually opposed the proposal of coal ministry to do away with coal linkages for a few of the power units. Monsoon update, IMD has indicated that rainfall remains 9% below normal since June 1st. China today weakens yuan reference rate by 1.9%. Government has capped kerosene subsidy at rupees 12 per litre and LPG subsidy at rupees 18 per kg. Satbam Engineering has backed total orders of 1557 crores from National Highway Authority of India. Dayanidhi Maran has been directed to surrender before CBI within next 3 working days. This could have a certain negative implication on Sun TV. GST bill has been included in business list today for Rajya Sabha. Syngene International is going to be getting listed today. Wokart's Chikarkalana plant is expected to resume sales to UK, so some positive respite coming in for Wokart there. Also friends, the third phase of FM radio auction has attracted bids worth close to 970 crores after 44 rounds of auctions were completed. This is a huge leap in the second phase of auction, in which a total of about 243 channels were sold for 1100 to 1200 crores. Government is also considering a proposal to allow sugar mill to export sugar to China under the preferential quota system as a part of a strategy to help them liquidate the surplus sugar stock. Important results which were announced yesterday post-market, Radico Khaitan, the PAT came in at about 18.1 crore versus 16.5 crore YoY. Ashiana Housing saw its net profit coming in at 6.17 crore versus 2.18 crore loss YoY. HTIL announced its consolidated PAT. The numbers stood at 59.2 crore versus 57.6 crore YoY. So broadly flat number for HTIL there. Important results which are likely to be announced today and one needs to keep an eye on. The SBI expectation is 3365, NMDC expectation is closer to 1000 crore, Sun Pharma expectation is 928 crore, HPCL an important number there, 861 crore, Apollo Tyre 299 crore, Adani Enterprise 156 crore, Apollo Hospital, the expectation is 92 crore, and finally Tata Steel, the estimate here is a loss of about 1192 crore. Watch list that we've created for the day, stock with positive bias, we have IB Real Estate, Sun TV and India Bull Housing Finance. Whereas stock with negative bias, we have Motherson Sumi, Coal India and SKS Micro. Stocks that we like from medium to long term point of view for investment, we have L&T, Aditya Birla Nuvo, Tata Motor, DBR, Infosys and Ultratech. That's all we have in today's session. Thank you.